Could we be seeing the greatest ODI cricket team ever, if not in this generation? And can we as investors explore some of the reasons for this dominance and apply them to cricket from the world of investing, stock markets and beyond? With bated breaths, we've all been waiting for the finals tomorrow, and it would not be a surprise if the world witnesses a history in the making on 19th of November for the Indian cricket team. Well, the current winning streak for the Indian cricket team in the 2023 ODI Cricket World Cup is quite possibly unparalleled, not just in cricket but maybe even in all of sports history. So let's get into today's video. If you like the video, please do comment, like and subscribe. It really helps us out and let us know what other videos you want us to produce. The Australian cricket team had won 3 back-to-back ODI World Cups from 1999 to 2007 and were undoubtedly the GOATs. That Australian team went on to win 34 matches across 4 World Cup tournaments where they won 3 titles. No one can come close to that Aussie team. There are a few notable mentions. The Indian cricket team under MS Dhoni's leadership had 11-game winning streak in 2011 and 2015 World Cup, and we also won the World Cup in 2011. West Indies and New Zealand also had similar consecutive winning game streaks. Can the Indian cricket team rival Australia of 1999 and 2007? It's very tough to compare. It's tough to compare right now, but India's dominance in the batting lineup, where players are averaging over 50 runs, our top 7 batsmen, if they bat to their career averages, may produce 330 runs. And our bowlers are having a blast this World Cup. So what do I as an investor take away from this? To become a GOAT, a legend of the game, you have to invest in the right players and ensure the team is performing consistently at the highest level and be strategic. Qualities which are equally very crucial and important when you're investing and you want to invest successfully. Investors must adapt their strategies and build a strong foundation and find the right support. The second point here is you need to have a long-term vision mindset, whereas if you look at our investment portfolios and you look at the yields that you're generating, that becomes substantial when you look at it over a longer period and you sort of iron out the market fluctuations. There are no free lunches and success doesn't happen just overnight. We need to understand and invest in the right resources, the correct investment research, dedicating time to understanding the market and finding the right investment advisor that can help you through all of this. When we're talking about the Indian cricket team, we obviously have to talk about Virat Kohli and his contributions. He's been breaking records and making history, and there are a few investing lessons that we can take away from here. So let's talk about 4 of them. The first one, setting goals and achieving them. He's got the most ODI centuries. He surpassed Sachin Tendulkar's record of 49 ODI centuries by scoring the 50th century recently. So the idea here is to set high goals and build plans that can help you achieve them. Investors should set ambitious yet achievable financial goals and strive to achieve them through smart decision making. The second point, consistency and discipline. He scored 1,000 runs over many years. He's broken Tendulkar's record by scoring over 1,000 runs in a calendar year for 8 years now. And successful investing also requires this consistent level of discipline. Regularly investing, staying informed about the market trends, not being swayed by short-term fluctuations are key to long-term success. Third, persistence and adaptability. Scoring across different formats. Kohli has broken and scored across all formats. He's the joint 5th fastest to reach 5,000 runs in tests. Fastest cricketer to score 13,000 runs in ODI, taking only 267 innings compared to Tendulkar's 321 innings. And there are many more such records that he's made. To excel in one format is difficult enough, but to excel in all 3 consistently for many years is what sets him apart. And that is exactly what we as investors need to understand. How can you push yourself and your investments to do better? Virat Kohli has a high strike rate with a low boundary percentage. What does that mean? It's about maximizing opportunity while minimizing risk. He has the 3rd highest ODI batting average. Kohli's career boundary to run ratio is 44%, which means he takes a lot of low risk shots. Kohli has a knack for converting singles into doubles and pushing for those extra runs, which reflects the importance of balancing high return investments with safer, consistent ones and ensure that you have a diversified portfolio approach. And how does Virat Kohli ensure that he's prepared to break records and make history? Well, Kohli, similar to Cristiano Ronaldo, works on his fitness and preparation to a degree that is at the highest level. Their supreme fitness, the mental strength, is one of the reasons that both of these legends of the respective games have managed to consistently perform at a world-class level. As investors, we need to be mentally prepared for market volatility, changing market conditions, staying informed and always striving to be better, continuously learning and building ourselves and our investment portfolios for sustained success over years. In this World Cup, we need to give credit to Mohammed Shami's performance, and that cannot be underestimated. He's delivered a player of the match performance in the World Cup semi-finals, dismantling the New Zealand attack and significantly contributing to India's victory. So let's look at some of the lessons that we can take away from Mohammed Shami's performance. First Indian bowler to take 7 wickets in an ODI, and that too in the semi-finals. This is peak performance under pressure. Shami has delivered his best under high pressure conditions when it was needed the most. Successful investing means maintaining your composure and making calculated decisions under pressure in tough market conditions. He's also the top wicket taker in the tournament with 3 fewer matches compared to the top wicket taker Adam Zampa from Australia. And what this represents is the consistency and the outperformance. He's taken 23 wickets so far in the tournament. His ability to outperform in fewer matches highlights the importance of consistency and efficiency in investing. Achieve better returns with a well thought out investment strategy, even with limited resources. The third investing lesson here is that he surpassed the previous best bowling figures by an Indian in ODIs, beating records held by Anil Kumble, Jasprit Bumrah, Mohammad Siraj, and many others. And it's all about setting and breaking those records. And it's very similar to what Shami is doing in terms of performing at a very high level and breaking those records and continuously striving for improvement and how he can get better. That is very similar to what you need to do when you're looking at investing. It involves setting those personal finance goals and figuring out ways to work towards them diligently so that you can surpass and beat them. And finally, in the New Zealand match, there was a moment when there was a drop catch early on, which Shami sort of suffered. And it's all about adapting and overcoming setbacks. His comeback from that setback to deliver a match-winning performance is very similar to what you need to think about in terms of the resilience and the mindset you need to have when you're investing. It's important to learn from your mistakes. We all make them. And you need to sort of have adapting strategies that help you stay focused on your long-term goals. Indian cricket team's recent victory over South Africa, New Zealand, and hopefully Australia tomorrow reflects the team's rigorous training and exceptional skill. Like cricket, investing requires a blend of skill, strategy, and teamwork. And here are the 5 lessons that we'll talk about. First, understand yourself and the game. Cricketers analyze the pitch, the weather conditions, and all of those important metrics before a match. It's all about being prepared. Understand your risk tolerance, conduct a thorough portfolio review of all your assets to understand where things stand for you, and then find investment strategies that fit your needs and your wants. Second, diverse and balanced team. Just as a successful cricket team comprises players with varied skills, a strong investment portfolio is diversified across different asset classes. This diversification reduces risk and has the potential to increase returns. Third, focus on your long-term strategy. Regular investing akin to consistent performance in cricket is the key to building wealth, and investing fixed amounts regularly, regardless of what's happening in the market, can yield significant benefits on a long-term horizon. Having that resilience, patience, and a clear strategy are essential for success in both cricket and in investing. Fourth, learn from your mistakes. Learning from our mistakes is crucial in cricket and in investing. Review past decisions, learn from them, refine your strategies for better performance. You need to be adaptable and be prepared to adjust your strategy in response to changing market conditions and even your own personal circumstances. 5. Find the right experts and mentors that can guide you. Cricketers benefit from the guidance of coaches, and so can you. Investors can gain consulting and expert advice of registered investment advisors, experts that provide insights, the guidance, and provide and give you those tailored strategies. Engaging with these professionals can lead to more informed and effective decision making. Hope you've enjoyed this quick video on some investing lessons from the greatest cricket team and some legends of the game. We're all waiting for tomorrow's India versus Australia's final, a worthy opponent that for those that love the game as much as all of us do. Who are you cheering for? Can the Indian cricket team achieve greatness? Will the men in blue bring it home? 1.4 billion hearts are beating faster as we get closer to tomorrow. There's no pressure here. Like, subscribe, and comment. We'll be back next week. Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Don't forget to